Hey everyone, this is a crossover episode between Bell Curve and Expansion. We discuss the Trump token launch, Solana's performance under stress, and the Ethereum Foundation's cultural challenges. Enjoy.
As blockchains actually become used and aren't just like research projects, it's really important that you have a really strong product voice. What are the problems Ethereum users or Ethereum ecosystem users face today? The Beam chain does not move the needle on that stuff at all. Have people who actually think holistically about customers, are actually the end user of the chain, think about product, and can push back and be like, guys, like, is this research stuff moving the needle?
Ultimately, everyone's going to hang on every word that Vitalik says, and I'm sure even if he's not in an explicit position of authority, he's certainly in a position of moral authority. It probably does have to come from him. Right? Like, I don't think actually anyone else is really capable of stepping in and fully changing the direction of the ship in as drastic of a way as it probably needs to be changed. This episode is brought to you by Aries Markets. To learn more about Aries Markets, follow the link in the show notes below. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another roundup of expansion. You got me and Nick, and then we've also got Jill and Uma joining us back again. Everyone, welcome.
Great to be here. Thanks for having us.
Yeah. This is an exciting episode because this is the beginning of a new chapter of the expansion roundup, where both Jill and Uma are going to be joining us as regulars on the show. So very, very excited about that. And you guys have both already been on the show, but maybe could I put you on the spot to just do a super quick 30-second intro for both of you so the audience knows exactly who you are, and then we can move past the fun celebration.
Yeah,
and
totally.
Get into these
Uma,
topics.
you want to go for it?
Yeah, I'm Uma. I'm the co-founder and CEO of Succinct. We're a project building a ZK VM and a decentralized prover network that hopefully will help scale all blockchains and beyond. And yeah, really excited to be here.
Awesome. And I'm Jill. I'm co-founder and head of strategy at Espresso Systems. We're working on technology to make Ethereum more composable. And what that looks like is a confirmation layer to provide super fast confirmations across rollups. So yeah, excited to bring my perspective and hot takes to the show.
So in addition to being lovely, very interesting people, I thought this was great to have both of your perspectives on a very modular focused podcast. We've got ZK, Gigabrain, and someone who knows more about rollups or has forgotten more about rollups than I'll ever know. So very excited to have both your perspectives on this show. So we're going to do some very right curve, more technical content going forward. But we actually have to start with the most left curve story of all time because it was the biggest story of the last week, probably the last couple of years. We had a Trump and Melania meme coin launch now last weekend. So it went live Friday at 10 p.m. I was telling you guys before, I probably picked the worst weekend of all time to be offline. I found out about all of this stuff 36 hours after it happened. I woke up to a stream of text from Yano, which I thought was a joke in the beginning. But yeah, basically, actually, Yano, we talked about this on Ember. He actually got a call from the Trump team on Tuesday saying, hey, we have a high profile token launch that's coming up. Can you connect us with a custodian? So we had some kind of idea that something was coming, but then obviously was completely unprepared for when this launched at 10 p.m. Eastern time on a Friday night. It immediately went to something like 30 billion in FDV. Everyone was extremely excited about it, I would say. There were a lot of very hot takes that were happening. And almost immediately after, I think 36 hours after the launch of the initial Trump token, we had a Melania token. And the market did not like that one bit. I think Trump sold off.
What did they expect, though?
I don't know. I mean, I think everyone kind of had the same take on this, right? Which is, hey, it's cool. The president is launching a meme coin, maybe a little bit grifty, but ultimately cool. And then it was like, ooh, this is an incompetent grift, right? This isn't even a competent, well thought out, well executed thing. So I don't know. The market sold off, and now everyone's kind of, I don't know. I would be curious. There's a bunch of different angles on this story. This is one, maybe there's a little bit of there was a choice to launch on Solana here, and how did the infrastructure hold up? And actually, I've got a bunch of data to show tells a pretty cool story, I think, of what it's like when something of that magnitude happens on your chain. There's a story of what does this actually mean for crypto in the United States? Does this mean that anything goes, or does it not actually mean that? And then I guess there's just a story of should presidents be allowed to do something like this? But maybe we can start with, like, is this kosher? So I don't know, however you guys want to start, I would be curious, maybe just on what does this mean for crypto writ large? Is this some really positive thing? Are there more negatives to this? Like, what do you guys just think about the implications for especially US crypto here?
Well, Mike, like you, I was actually offline when all this popped off, and I learned about it from a text from a completely normie friend of mine that said, "Hey, what do you think about this Trump token thing?" And I was like, "Wait, what?" And so I quickly read up on it. And obviously, when your normie friends text you like that, what they're really asking you is like, "Should I buy this thing? Do you think it's going to go up?" And I was like,
Right.
"Dude, I have no idea. Like, this is not financial advice. But what I can say is I think this is really bullish for crypto on the whole for a lot of different reasons. One is, it legitimizes meme coins to some degree. It draws in a ton of new users, and just, think about like the whole media storm that went around this Trump thing. Like, it's just attract a lot more eyeballs and attention to the space. And then beyond just that, it's, to me, opened up the Overton window. I'm not sure if I'm using that correctly, but I think it's means that like not anything goes, but what is acceptable to do is like just widened to a level that I don't think we've ever had historically in crypto. Like, I think a lot of people would be afraid of launching a meme coin in the US, like transparently, just even like a few months ago before Trump was elected. But now, like, it's clear that I think we're going to be in a completely new regulatory regime where you can get away with and feel safe potentially launching whatever, whenever, wherever. So this could mean like a huge influx of like speculation and new token launches. So that's kind of the way that I see it.
I think it has definitely expanded that Overton window of what's acceptable. I mean, a lot of the takes on Twitter over the weekend were, okay, so now we're doing crime on chain. Let's go. I'm happy to be the mid curve on this one. I don't know that this is a good thing. I think that I'm surprised that there hasn't been more kind of retail anger and backlash, at least that I've heard or seen from what's amounted to a pretty massive rug pull. One thing that we didn't acknowledge yet is that I think 80% of the Trump meme coin was held by insiders. Like, that is, it, again, talking
88
about like,
from Melania.
Oh my God. Overton window acceptability. Like, we were trending towards like, it's got to be sub 50, it's got to be sub 40, for VC coins. And now suddenly, okay, but it's, it's apparently kosher if the president does an 80% insider allo. Like, again, we haven't maybe seen the backlash, at least that I would have expected as the resident midwit yet, but I would be surprised if we see more of these and then we don't see that kind of backlash. And I think that backlash could be even stronger than the negative sentiment that we've seen against crypto in past cycles, because honestly, in my opinion, it's kind of justified this time around. Like, I'm very much in that camp of like, if Gary Gensler had only made reasonable regulations and expectations for the industry, we might not find ourselves in this situation right now where it's being taken to an extreme, meme coin specifically, or being taken to an extreme on the highest profile.
Uma, curious to get your take here. And I know you were also trading in the trenches, Trump and Melania.
Yes, tell us about the trenches.
I would love to get, your...
I think when I first saw Friendtech, I actually thought that was like one of the most interesting projects I've seen this cycle. And obviously it ended very poorly. And, the UI and the UX for Friendtech was always very poor. But I thought the fundamental thesis of social coins, or, famous people having coins and then having communities around them in this very internet native financialized way was always like an interesting hypothesis. I'm not saying it's like 100% right or wrong, but like an interesting thing to try. And so I was actually really sad when like Friendtech kind of shut down and stuff. And I think it was interesting to see that thesis be brought back to life with the Trump coin, with arguably like one of the most famous people in the world. So that was like cool. I totally agree. The Melania thing kind of made it very, very grifty. I think before that it was like potentially exciting. and like, oh, what is he going to do with this? Where is this going to go? Like maybe that could even be like a top 5 coin, right? Like I think had he not done the Melania thing, it could have gone honestly a lot higher. But yeah, the Melania thing kind of made it clear that it was much more grifty, maybe more just like a cash grab. So yeah, in terms of my personal experience, I was actually in the office at 7 p.m. because I'm on the West Coast, and my co-founder and I were there. We see Trump tweet. We first thought it was a hack, and then we're like, all right, we got to buy this. So we were in the trenches. I haven't actually used Solana that much before, so I was like transferring from Coinbase to Solana, loading up my Phantom, and I bought a very, very, very small amount, to be clear, and tried out the chain. And honestly, it worked really great. Like everything went through, transaction landed, got it, saw the chart going up, was like, okay, this is cool. And then when Melania happened, I was actually also in the office on a Sunday, and my co-founder and I were also there, and we were like, all right, well, the last one went well, we have to buy this one too. And so we bought Melania. Actually, that time, Solana did not work well. So I believe Jito went down or something like that happened. And it was a horrible experience. Our transactions wouldn't land. There was insane slippage, like totally insane slippage. The transaction fees were actually really high. It was like a couple bucks. Things were reverting. I had to like go into Jupiter and like change this. I had a Solana friend telling me like how to change all the settings, and like it was really confusing. And I was like, oh, wow, Solana is like completely bricked right now. And the chain actually was not functioning, I think, for, an hour or maybe even a bit longer. So, yeah, it was interesting to see like those two different experiences. Like I thought Trump on the infra side, Solana did really well for Trump, but for Melania, it definitely showed the network still has like a bit of growing to do.
Yeah, this, so I'm sharing my screen. There's a tweet from Dan from our team. So Jito experienced basically a 3-hour period of downtime. The median priority fee jumped 5,000x. Transaction count fell 66%. And CUs per block, which is the Solana equivalent of gas per block, fell 50%. So it shows you just how critical Jito is to the network, actually. Probably the best analog that I would give you is basically MEV boost on Ethereum, like all of the PGAs that used to happen pre this off-chain auction that Flashbots run. Yeah, I would say Solana is pretty dependent on Jito functioning, especially during these periods of extremely high transactions. So,
what do you guys think? Would you call it a victory for Solana this weekend or a condemnation? Because my timeline was totally mixed. I had all of my Solana friends doing victory laps, which honestly I think is justified. I think I saw Raj from Solana posting that they handled something like 10% of daily NASDAQ volume in a single day. And then as soon as the Jito thing happened with Melania, I had all of my Ethereum friends being like, yeah, rollups for the win. This is the future.
This episode is brought to you by Aries Markets. Aries Markets deployed on Aptos in 2022 and is now the largest lending protocol with $280 million in TVL. To learn more about Aries Markets, follow the link in the show notes below. Okay, I think it's a massive win for Solana. And here, let me actually describe it in charts here. So there's obviously what Raj said is right. The DEX volumes absolutely exploded. So this is, you can look at, this is a daily, they did almost $40 billion worth of volume in one day, which is, that's absolutely crazy numbers.
Wow. Yeah.
Here's something else that's pretty interesting. If you look at what happened with stablecoins on Solana, this is what happened, post the Trump launch. So they got about $3 billion or $3.5 billion worth of new stables that migrated. So even if you want to say, okay, this meme coin trading activity is ephemeral, or it's not very good, or it's immoral, or something like that, there was a very, very significant amount of new asset issuance in the form of stable coins, right? Which everyone basically agrees is a good thing to have on chain.
Totally.
And then the other, I actually think the last data point that I would show you here is the amount of new wallets that got created on Solana, or that started to trade this Trump coin for the first time. So here, sorry, this is going to take me 2 seconds to pull up here, but it's super interesting data because anecdotally as well, I had a bunch of normies reach out and ask me hey, that had never bought crypto before. They were like, hey, how do I buy this Trump coin, right? And so this actually comes from, I think this is Chainalysis that had this data, but 50% of Trump/Melania holders had never bought a Solana altcoin before. 47% of buyers created their wallets the same day that they purchased the tokens, and 83% of holders own sub 1K of Sol assets. So just the onboarding here that happened, and you can also see it with, and I think another big winner of this was Meteora and Moonshot. So there's something pretty clever that Meteora does with some of these more celebrity coin launches, which I don't even know if these are meme coins or if they're celebrity coins, but you can basically provide one-sided liquidity, which in a concentrated liquidity, if you're balancing a pool, essentially equates to selling, right? So I'm sure that's part of the value proposition for these people that are launching with massive percents locked up. But I think Moonshot got something like 400,000 new users. I don't know. I felt like, and Solana pumped to it. Now it's back down or trading around 260, but it pumped to almost
all-time
300.
highs.
Yeah, all-time highs. So I don't know.
Huge for
I think
Phantom too. Big win for Phantom as well. They held up really well.
Yeah.
Yeah, it was my first time using Phantom, like for actually trading, and well, it sounds like I'm retail because I fit a lot of those characteristics. But yeah, it was like a really good experience. I think something Phantom does really well is when you create an account, you can sign in with like your email. So the default is actually sign in with email, not with like a seed phrase. And I actually did like a kind of product analysis of Phantom versus MetaMask afterwards, kind of to be like, okay, how does MetaMask compare? And yeah, MetaMask's default is a seed phrase, and that's just so much worse because you have to like write it on paper. It's really scary. It's really like unfamiliar. Whereas the Phantom onboarding was really top notch. So I was very impressed by that.
And Uma, you managed to get your Sol out of Coinbase. That was the other big drama around all of this, right? Is that Coinbase's infrastructure, I guess, is like famously bad around Solana and is very high latency. But that wasn't an issue for you.
Yeah. Yeah, I got lucky, I guess.
First mover. You were in early.
I was in early. Well,
Yeah.
I think it's important that like I actually wrote a tweet about this, I think yesterday or the day before, that I think one really big failure of the Ethereum community is that most of the people in charge or most of the people running companies do not actually use the chain. And the majority of volume on chain today is for speculation and gambling. And, you know, we can have opinions about that, but I think it's really important to try out the products as they exist and like form opinions and like understand how things can be better. And like, you know, part of it, I was excited about the Trump coin, but like also part of me was like going through the exercise of being like, all right, this is going to be like a really big event. Like I want to be a part of it and actually be like part of the users of the products we're building.
There was a really interesting. What do you think, Nick?
Just
by the
for
way,
my own experience. Yeah. Oh, in terms of Solana versus Ethereum, or if it's a win?
Or like if this was a win for Solana in general, like what do you think?
I mean, obviously it's a win. I mean, is there any other infrastructure? I mean, sure, yes, they had it pushed the limits of what their network can withstand, but I mean, it's, as you just showed, it's like the largest single influx of new users ever, probably in a single day or a single like weekend ever for the industry, and they didn't. I mean, I feel like in previous eras, they would have like just fully halted, or it would have, I would have expected fees to spike even more than they did. Like the fact that it was only a few dollars and it was pretty like not that bad, frankly, for the scale, in my opinion. But I think it does show that there are limits to what we can do on chain still. And I still think that rollups are the long-term solution. But the irony of this is that on the other side, we have like what happened with the anime coin launch on Arbitrum, and how that was a much smaller event, and the fees got way worse. So I feel like the Ethereum camp, it's not a good look right now to try to like lord it over Solana and be like, see, you guys need rollups, when I think the rollup infrastructure still is struggling. I think a lot of that's due to blobs. Not necessarily the roll-up execution per se. At least that's my impression.
There was so here just a little bit of a few statistics on the anime token, which is linked to Azuki. So the TPS peaked at 101, which caused a spike in median transaction fees to $1.20, which is 355x higher than usual. So Yeah, that's definitely. I don't know what the quantum is of like the anime token launch, but I have to imagine it's several orders of magnitude smaller probably than Trump. So not meant as a knock on Arbitrum at all here, but there's definitely maybe still a little bit of work to do. And I want to start to transition to more right curve content in a little bit and talk about Pectra and also native rollups. So Justin Drake put out a super interesting piece this week, and Uma, maybe we're going to call on you for a more technical explanation of that and try to unpack if there's a better model for rollups, and then also Nick try to get how that like the impact to Celestia on all of this. But there was actually I was looking for it, I couldn't find the tweets, but the Ethereum Foundation was obviously catching an enormous amount of heat over the last week or so. And I think Danny Ryan, who is being talked about, is coming back and potentially starting as the executive director, tweeted out, "What would you like to see Ethereum researchers do on chain?" And Kobe tweeted like 3 things. It was go on rollups and trade in between USDC and the native gas token. So like ARB USDC, go on and trade a cross pair, right? So like Pepe ARB or something like that. And then go to Solana and try to do the same thing and try to trade profitably. And there's this whole back and forth about why do you actually need to do this and why do you need to trade profitably? And his point was that if you're trading in size and you're trying to do it profitably, which is what your users are doing, you literally can't do it on rollups today, but you can do it on Solana. And it was a very interesting point. It actually wasn't intuitive to me. I had to hear him like walk through the whole explanation. But now when I think about it, it's like that's who your power users are, right? People that are trading in size that want to make money on chain. And if you can't do that on a rollup, then that's really challenging, right? Like that's maybe why it's been a slower
I didn't
uptake
see
in
this, Mike. What was Kobe's reasoning, or what was the logic? Was it about fragmentation?
Yeah,
Yeah,
the liquidity is fragmented, so it's not deep enough to trade in size.
Yeah, the spreads blow out after a certain point. It's like for retail users, like it probably not for you and me. Maybe not Uma now that she's a Trump whale, but once you basically once you're trading in size, yeah, I don't know what the amount is, but like maybe say a couple $1 million, which is probably what makes sense for you to prioritize from the perspective of a roll up. You're not really caring as much about someone punting $1,000, but you definitely care about someone trading 2 to 5 million. If you can't do that because of liquidity on a roll up, then that would be very limited.
I mean, this is something I was going to say about the Trump phenomenon is I have to wonder what the sort of NPS score, like the net promoter score, which is something a lot of consumer companies talk about themselves. What is the NPS score of all of those people who came on and traded Trump on Solana? Like, most of them probably did not make money, right? I'm curious. I mean, most of them probably had a better experience on Solana's infrastructure and Phantom Wallet today than they would have a few years ago on the ETH L1 and MetaMask. But to me, I feel like there's not enough. I'm glad that Kobe is kind of promoting this line of conversation with the EF, but I just don't think that there's enough focus on what the actual user experience is. Also, to Uma's point, like we all need to be testing this ourselves, and we need to be feeling these pain points, and we need to understand actually, like, does it make a difference if the fee is 10 cents versus $1? Or is the thing that's really making a big difference the lack of liquidity fragmentation, slippage, like these other dynamics? So yeah, that's really I'm glad to see Kobe taking up that mantle. He's a busy guy lately.
Jill, can I maybe push back on that a little bit? Because I actually think that most people probably get sucked into crypto buying, if you're me, XRP. I know everyone else had more noble first bags than me, but most people basically get sucked into crypto, buy something stupid, and lose money on it, right? I would guess that that's the onboarding.
I mean, that was me with Bitcoin actually in 2013. I bought close to the local top there. Yeah.
Right. So
and I was out of the money for years. So I agree with that, but I think that I don't think that we are like the norm. I don't think that we are the average consumer that we're looking to onboard here. And I mean, maybe we just have to go through enough cycles of this, of like burning people and then getting them kind of nerd sniped on it, of like what happened there. But I don't think that that's going to be the average experience. I think that most people who get burned, whether it's on a bad trade or a bad user experience or high fees or whatever, they're going to be like, all right, this is not worth my time. I'm busy. I've got a real job. I've got a real life to live.
I've talked to Jason about this before. I don't know if this cohort analysis is even possible to run, but I would love to run an analysis on people that have stayed in crypto when they got in different periods of the cycle. Like,
Yeah.
I would guess that most people actually do fit the description that you just gave, which is you get in around the tail end of a crypto cycle, you end up buying some shit. Then you might end up like working. I think really what it is that makes it sticky is you end up getting a job in crypto.
Yeah, totally.
And then that's
The
where
crypto
onboarding
market today is people who work in crypto. And then we have these kind of like one-off events that we like to talk about as onboarding events, like people buying into the Trump meme coin, or I don't know, people gambling on Polymarket or whatever. But I think that those are one-offs and not as sticky as we like to think or talk about. But I think that I'm also talking about how do we actually onboard the masses versus, like, Mike, I feel like you're getting at how do we onboard more of these kind of like niche weirdos, like the four of us on the call who did get nerd sniped into this, even off of that trade. But I appreciate the pushback. I recognize I totally fit into that archetype too. So maybe that is how we draw people in.
I don't know. It's unclear. Because I intuitively also hated this in the beginning, but I've also just kind of watched it work. And it's like I'm waking up, 8 years after being in this industry, and this industry is 100 times bigger than when I first got in. There's way more people. There's way more cool stuff going on. We have Larry Fink that's saying that we should be tokenizing stocks and bonds. I don't know. On the one hand, I'm with you, and there's something about it, right, that I also don't like. I'm a foil on both sides of this debate, whoever is debating me the other way. And because I also don't think gambling is like a societal good. I just don't think this is like a desirable thing that we should be optimizing for. On the other hand, it's hard to deny that it's empirically working. And I think over time, there will probably just be a transition away from stuff that is more gambling and speculative into hopefully more material use cases. But I have a ton of faith that that's what's going to happen eventually. And
I think historically, speculation always precedes like the sort of birth of a new industry, whether it's like railroads or whether that was like transoceanic like exploration back in, Amsterdam
internet
or whatever.
Yeah.
The internet, exactly. So I feel like it's just a phase that every one of these technology platforms has to go through. And it just so happens that interestingly in crypto, like the speculation is kind of one of the use cases because you can do it on chain in this permissionless way, and you can build like these financial primitives that enable it. But I think it's just like I think people that get overly nihilistic about it are kind of like missing the forest for the trees. So they're like a little bit too like short-sighted to realize that like it's a phase that you just go through, and it's great because launching Trump is testing the rails that we're building and making sure that we can actually handle more serious like large scale use cases, in my view.
I think where crypto differs though, Nick, and then we can move on, sorry, Mike, to more right curve content here. But yeah. I think where crypto differs is that we like to conflate the speculation with onboarding events. Like that is the word that I keep hearing regarding the Trump phenomenon. And like no one during the railroad bubble or during the internet boom of the early 2000s was saying like, oh, because pets.com is trading at X, that means that we have onboarded the masses to the internet, or that means that there's real usage there. And I think that with crypto, it's sort of like the speculative asset and the product are often one and the same. And so we take these moments in time where there is like a spike of usage and interest as an actual onboarding event. So I guess I just don't know how real or sticky those numbers are going to be for this one. But trust me, I'm hopeful that those people stick around on Solana and play with other cool stuff on the chain and get DeFi pilled and all of the rest of it.
So can I actually give maybe what is a crude analogy here, but I think it might actually hold, which is actually the number one usage of the internet when it first came out was porn. And there might be an analogy between porn and meme coins here where actually, like even still to this day,
It feels
35
good while you're doing it and you regret it.
That's not actually what I was going. No, it's not where I was going. But it's Porn actually battle tested. They actually led the charge in a bunch of the early like video playing infrastructure around the internet that directly led to social media, and it's still 35% of bandwidth today. So I don't know. Maybe I sort of feel like maybe that makes an argument for.
I like it. It's like, I like that analogy.
You know what I mean? It kind of battle tests the infrastructure. It actually weirdly pushes things forward.
Yeah.
It still is this use case that's kind of a sin use case that no one really likes to talk about, but obviously people there's some amount of merit to it. So I don't know. Now we ended on the
crazy thing is, Mike, that I think porn is still one of the like largest consumers of bandwidth globally on the internet.
Yeah,
as well.
It's 35%.
So maybe speculation just stays like a massive part of the industry indefinitely.
But also, do you not think this is about finance? Sometimes I think that the allergic reaction that people have to speculation in finance is, I mean, how much of this? I feel like there's a lot of degeneracy that just happens in TradFi, isn't there? It's just better assets.
Like a mustache
right?
and a pipe, and like sort of dresses it up to try and look a little bit more respectable.
Quick shout out to today's sponsor, Aries Markets. Aries Markets deployed on Aptos in 2022 and is now among the top 10 lending protocols across all blockchains with $280 million of TVL. Aries Markets has expanded its product suite to become a fully integrated DeFi hub combining lending, borrowing, and more. In 2024 alone, Aries introduced several new features to better meet the needs of its users, including native USDT support, an incentive program, and more. Click the link at the bottom of the show notes, head over to Aries Markets and tell them that I sent you. All right, I want to pivot from Trump and porn to native rollups. So we had so Justin Drake put out a really interesting piece on ETH research, and this actually, the first person that I heard talk publicly about this was actually Martin Kopelman back at DevCon this year. So when Justin Drake gave his Beam talk speech, there was another one from Martin talking about native rollups. And this was actually a relatively older concept. I think people used to call them enshrined rollups, but it's a little bit of a different construction even from based rollups. And Uma, I saw you going back and forth a little bit with Justin Drake and actually Vitalik on Twitter about this. So can you just give us a quick summary of what the post was, and maybe give us a little bit of a topology here of like what's the difference between a rollup versus a based rollup versus a native rollup?
Yeah, for sure. So basically, let's start with like TLDR of rollup. Basically, you have ETH that gets locked in a contract on L1, then the execution happens off chain, and then a proof of the execution, either like a ZK proof or a fault proof, is used to like verify that the state root of the world is correct and transactions are processed correctly, and then you can withdraw your ETH from the bridge contract. Now, most rollups today, basically, they roll their own like proof system. So they have their own method of proving validity to the L1. And the fundamental reason that's bad is because Ethereum is upgrading like every quarter or every half year. There's a hard fork where the EVM goes through changes, they add features and stuff like that. And so if you're a rollup and you want to stay EVM compatible, you also have to have a way of upgrading your like proof logic on L1 to like keep a pace with all these developments. And the way that works today is most rollups have a security council that's responsible for like, basically it's a multi-sig where people sign off on like upgrading the bridge contract. And a security council, if it's like, has enough people on it, there's a time lock on it, is actually maybe not the worst thing in the world. But in practice, it's bad for a few reasons. One is if you talk to any rollup team, having to maintain a security council with a list of multi-sig members is a huge liability. And so that's like one bad aspect. And the other aspect is that it basically like takes away from the security of the L2s. Like L2s today do not have the same security as L1 because like if there's a bug in the proof system, then you're kind of screwed. Like the money in the bridge can just like be arbitrarily like hacked or taken at will. Whereas in Ethereum, if there's like a bug in, the L1 layer or something, then you have Ethereum social consensus that can like fork the chain. And so that's kind of what people mean by like the importance of rough social consensus and stuff like that. And so, yeah, one really interesting fact about like the practical implications is that John Charbonneau pointed out in a recent piece that only 2% of ETH has been bridged to L2s. So it's actually a very, very small amount.
Seriously?
That was shocking to me.
Yeah, it's
Yeah, me
really
too.
surprising.
Mhm.
And John Charbonneau kind of states that like, oh, well, there's this myth almost in the Ethereum community that like, oh, rollup security doesn't matter. The users don't even care if there's no fault proofs, blah, blah, blah. But he pointed out that no, actually people do really care. And the way they express their preference is like, no one's bridging to rollups at all. And you have these pretty big ETH whales who replied, like I think Sasal and stuff, being like, yeah, I don't feel equally comfortable holding my money on a L2 as I do on L1.
Mm.
And I think fundamentally native rollups completely solve this problem, which is really awesome because now you have like the proof system for a rollup enshrined as part of L1. So it becomes this like, I mean, we can go into the technical details, but it becomes this like precompile on L1. And rollup teams can just use that proof system and they don't have to make their own. And because that, like, the way the rollup now proves its validity to L1 is part of the L1 logic, it's also governed by Ethereum governance. So it has like the exact same security properties as L1 itself. And now you can imagine like with native rollups, L2s actually inherit security from the L1. They have basically the exact same security. And that now, you know, it kind of gives a path for people to feel equally comfortable holding their assets on an L2 as they do on L1. So I think that's like the biggest reason it's awesome is it like genuinely makes L2s as secure as the L1.
Why does it make it as secure as the L1? I mean, can't there also be a bug in whatever proof system they choose? Or is it then that if there is a bug, because it's part of the Ethereum L1, they would like hard fork and fix it? Is that why?
Yeah, because the proof system is part of the Ethereum protocol, it is also subject to like the rough social consensus of like Ethereum upgrades. So yeah, if there's a bug, then it can be like forked by the system.
Interesting. But how do you feel about this? Like, I feel like, well, maybe not succinct itself, but I mean, the whole story of the development of the Ethereum rollup ecosystem to me has been like, who has the best proof system? You know what I mean? Like, we have fraud proofs, these guys have ZK proofs, blah, 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 whatever. And a lot of that I feel like has turned out to not be that relevant because like, you know, some of the most like successful rollups have just basically have foregone any kind of proofs. But does this king make and does this kind of screw over like a lot of the existing rollup teams and everything that they've built?
No, I definitely don't think so. As you pointed out, like no rollup has actually managed to differentiate itself based on its proof system, right? Like even though they like to think that they do, and that is like usually a big part of their development effort, in reality, there's actually a lot of other parts of the rollup that matter a lot more. For example, how it gets sequenced, or you know, like what's actual user experience, or what's your community, what's your apps, and I don't think rollup teams should really care about their proof system as much because it's not like a real differentiator to the end user experience that the user feels. So I actually don't think it rugs the existing rollup teams at all. For example, they can still differentiate on the sequencing layer. Like they can have, you know, MEV free sequencing with like T's or whatever, or like, oh, really low block times or whatever. Or, you know, they can have their own apps and communities that are differentiated. So I actually still think there's like a way to provide a really differentiated feature set and revenue from sequencing and MEV while using Ethereum's like native proof system.
Would you agree though that it's hard to imagine, you know, Polygon or Starkware or any of these guys trying to go this direction, even just given the sunk cost of many years put into developing their own proof systems? It's not an argument against this as like a concept, like this can still take off, but it feels like it's not something that the big ZK teams are gonna pivot towards easily.
I mean, I think with any business, you have to like adapt or die, right? So you just cannot ignore reality. And I think, I mean, okay, to be fair, I think there's a lot of questions around who's going to ship native rollups. What's the timeline? Is the EF actually in a competent position to execute on this well? Because if they implement it really poorly, then I agree no one's going to use it. But if Ethereum does ship it and it's a great product and a great offering, and then some rollups move over to using it, and now they can say, I have L1 security while everyone else doesn't, then I think, you know, that's reality and you just have to like face it and yeah, like change your strategy or offer a different set of features, or, you know, go to zero.
The irony that, or the problem that I see with it is that now it's limiting the scope of what kind of rollup you can build. Like, sure, you can still have the sequencing side, but now you have to be fully EVM compatible, this one standard. And to me, one of the selling points of rollups and what's so exciting about like modularity is like customizability. And like, maybe I don't want to run an EVM chain, right? And there was a lot of pushback and criticism, I think rightly so, of the rollup ecosystem like late last year about like, everything's just like, we don't need another EVM L2. You know what I mean? Like, we want something like Hyperliquid, for example. And so I feel like, again, this kind of misses the mark in terms of like what the market really wants from rollups. Is like, we don't just need another EVM copy pasta chain. Like, to me, this is just like sharding. This is like sharding of the ETH-L1, but in a maybe slightly more permissionless way. But like, we need to go far beyond that, in my opinion.
It's explicitly not modular, I would say, right?
I kind of disagree. Like, I think you can still have a variety of other rollups that are application specific. And in fact, I think this path encourages that. Like, it's saying Ethereum L1 is going to eat all the general purpose, fully EVM compatible rollups. Like, we're going to provide like an enshrined proof system, and, you know, you can play in that game and like do sequencing and stuff like that to provide a general purpose EVM rollup. But I think actually it'll push builders towards building application specific rollups or more specialized rollups to differentiate. So like, I don't think it's everything has to be a native rollup. It's like native rollups will exist. They will have great security properties. They will inherit L1 security, but new teams building rollups, you should go crazy. You should customize it, and you can still deploy a rollup with the security council or whatever, right? Like, you can still deploy a rollup as an app on, you know, an L1 basically, and like, there's nothing stopping you from doing that.
That makes sense to me. So it's more about, this is an answer for general kind of general purpose execution that we want, and this maybe ends up then either being a path that like Arbitrum One and the Optimism chain, et cetera, have to adapt towards, or, you know, the EF ends up, or somebody, the second foundation, whoever ends up executing on this roadmap. But you're saying that there's still very much a path for app specific chains to go a different direction, not be native.
Yeah. I just view it as like Ethereum's offering a new product. Like today, Ethereum offers you L1 block space. It offers rollup blobs. And now Ethereum is offering a product of the proof system that has L1 security that's governed by Ethereum governance. So and
it's kind of interesting to think about, like, Ethereum is this monolithic chain, and then there's all of these almost like applications of it, depending on whether you're using it for a combination of, I guess, DA, now proving. The based sequencing side is obviously using the L1 for sequencing. It's just kind of it spins it on its head of how you think about what an L1 is for.
I think it's interesting to think about like a service model. Like, what is the correct service model for an L1 to L2s? So what do L2s want from their L1? And I think that a huge, my understanding as well is native rollups also solve for interop, like native interop. Correct me if I'm wrong there, Uma. But I think
that's more based. But Uma, you can.
Yeah, it's like, I think Justin Drake has like a better articulation, but it's like, if you do based plus native, then you can get native interop.
But if you do the based plus native, then you also forego the MEV for the most part, right? So that would be the trade-off, I would guess, from the app standpoint.
Yeah, I actually talked to Justin about this, and his opinion is MEV anyways is just going to go back to the application. So like, if you're a rollup team, it doesn't even really, like, in the long term, you shouldn't even rely on MEV. But if you're a based rollup, you can still actually get sequencing fees from, even if you're based. And he has this like better articulation of why that is the case. I was convinced by it, and Justin is smart, so he's probably right about that. But yeah, he was like, base native rollups can still make money from like sequencing fees.
Yeah, I mean, this is something that we've worked on at Espresso, of like having a sequencing marketplace, which is, if you think about like the way PBS style marketplaces work today, but you just had those across L2s. and then L1 validators were able to participate in it. But it's admittedly adding some complexity to the system, although maybe not over and above what already exists on L1 today.
Would it be crazy to think about, this may be a little bit of a leap, but just to think about ETH L1 as a rollup itself, right? Like in this world, right? Like, wouldn't that effectively be what ends up happening?
It should, I think, eventually. I mean, if Ethereum wants to go fully modular and like remove like execution from the L1, like this big heavy state machine, I think that they need to turn into rollup. And I think there have been posts and sort of like whisperings of that since the very beginning. But again, also it's like, how long would it take to execute that? Like, when would that actually happen? You know what I mean? And that's very scary to do. Like these billions and billions of dollars, like migrating to sort of a new mode of operation.
Is this kind of like the Mina style of like all execution is happening in a rollup and like the validators only need to validate the proof?
The other thing actually that I'll add is that like in the original Celestia design, the hope was that we could actually make all of the Celestia execution a rollup. So it's like there's literally nothing happening on chain. Like all the payments, all the staking happens somewhere else. But then we realize that there is some minimum set of things that need to happen like on the L1. And those are the only things that we enabled. So like paying for fees, staking, all those things that need to like, everyone needs to be aware of that in order to actually verify the chain. Those can't necessarily be spun out. But like any kind of smart contract execution of Ethereum, I think can and should eventually be migrated. But then Ethereum just starts to look like pretty much like Celestia, I think, at that point.
How does this conversation intersect with the scaling the L1 conversation in general? I would be curious to get your guys' opinion. And it's hard for me to really handicap when you see some of these posts what the likelihood of this happening is and what the timeline might ultimately end up looking like. So I don't know if those are all shots in the dark, or Uma, it sounds like you've actually spoken to Justin Drake about this, but I would just be very curious, like, yeah, both of those things, down to brass tacks, like what is the likelihood of this happening?
I mean, it seems like the Ethereum community is pretty excited about native rollups. I'm really excited about it personally. I think it makes a lot of sense. Yeah, there's always the question of turning this like research direction into like execution. Who's going to lead it? Who's going to spearhead the project and like take it over the line and ship it in a timely fashion? My opinion is like, it could be 6 months with the right team, but I mean, I'm sure we'll talk about this later too in this podcast with the Ethereum Foundation. There's always the question of like, is there the right team? Is there the right level of competence? Are the right people in charge making the decisions and moving fast? And that to me is like a bit of an unknown.
Yeah, I mean, just taking base sequencing as an example here. I mean, this is an area that I was close to when that article came out. I want to say like a year and a half ago, something like that. It's not like the EF has gone and spearheaded a task force to implement base sequencing or even, continue to push the design forward. I think it's really mostly been Justin. And then you have teams like Spire. Spire was actually working on its own rollup stack, and then they fully pivoted to working on base sequencing. We've obviously done some work on base sequencing at Espresso. I think I like to talk about this as like the privatization of the Ethereum roadmap. It's like, it's kind of like, the Justins and the Donkrods and whoever of the world come up with these research directions, and then it's up to kind of the private venture-backed companies to take it and run with it. And unless we see major changes at the EF, which like maybe we are seeing that in real time, I think it's pretty unlikely actually that the EF does end up coming out with like their own native rollup that's going to compete with Optimism and Arbitrum One and Ether Lunch. Even though we were using that a few minutes ago as kind of a hypothetical, I think that's pretty unlikely.
I'm curious, Joe, what you think about that model of like the Donkrods and the Justin Drakes coming up with the general direction, and then this like privatization dynamic. And Nick, from your seat in Celestia, like, is that a desirable, like when you guys look at that model in general, how do you feel about that? The right model? Is Celestia pursuing something similar? Like, I would just be curious, just what everyone's opinions are on that general direction. Or
yeah, Nick, go for it.
So I think my perspective has been like one of the benefits of modularity and modularizing the infrastructure stack is that you can have a bunch of different teams raise capital or not and build in parallel a bunch of different experiments. I feel like centrally planned economies always sort of like falter or fail in long term when compared to something that's like more open market based. And to me, like, you want to have a free open market for like the infrastructure stack. That said, I do think that there are certain minimum things that maybe it makes sense to standardize and enshrine potentially in the L1. I feel like where the sweet spot is still like TBD. I mean, on one extreme you have a Solana where it's like almost, like as monolithic as you can be. And then on the other side, I think you have Celestia, which is like as minimal as you can be for now. And then Ethereum kind of in the middle. And I think like it's too early to say which approach is going to work. I will say that like for Celestia, one of the things that we realized, in the past year was that not having some, like, I think interop and having some way of like providing better distribution and interoperability for applications and rollups in your ecosystem is something that like is very useful to build into the protocol. And again, it doesn't have to be that like you're forced into it, but having that option there in a permissionless way can solve a lot of problems. And that's why we've pursued this like lazy bridging approach. And the reason we didn't do that at first is because like before there was this idea of like before ZK was really like feasible, adding that kind of like settlement and like interop feature to the L1 was going to be too heavy and open up too many other like, possibilities of things that people could do that shouldn't belong on L1. But adding this like ZK verification opcode is so minimal and provides potentially so much benefit that it did make sense. But beyond that, I at least for now don't see any other kind of like additions to the Celestia base layer, and everything else should be an open market in my view.
Jill, I'm curious to hear your thoughts, and then I want to transition and talk a little bit about this.
I'm conflicted on it. Yeah, to be honest, I think that on the one hand, like ideologically, I'm inclined to agree with Nick that yeah, everything should be like a free open market. Central planning doesn't work over the long run. But I also think if you look at examples of big infrastructural undertakings, you need to have some central, like you need a NASA, right? And you can have a SpaceX contributing, but you need some degree of central planning to get things working the right way and up and running. And I think that anytime you run into a coordination problem, which fundamentally, Nick, I think is what you're talking about here, of like, how do we get interop? How do we get composability if we're not all working on the same monolith? I think that's where then you need that element of, again, I'm going to keep calling it central planning, but I think that's what Solana does really well, just as like a part of its value system. And you can see that in everything from the way the tech is designed all the way up to the way the foundation works. And I think, Nick, as you say, like Ethereum has found itself kind of caught in the middle where maybe it veered towards decentralization of governance without fully considering the kind of coordination that the rollup centric roadmap was going to demand.
Yeah, I think maybe one last thing that I'd add is like, if you compare, blockchain to like a, government in the real world, like there are certain sectors that it makes sense to privatize. But then there are other things, like let's say like, electricity and like basic utilities or roads that everyone needs. And it kind of makes sense to keep those as like just public goods that are operated by the government or very closely integrated with the government. I think maybe that's like the right mental model here. So like what is the equivalent of like roads and electricity and things like that for an L1 blockchain? I think that's where the debate is. Yeah.
How would you guys articulate that? I would be really curious. Like, this is what, so I think that maybe one of the challenges that the rollup centric roadmap has run into, at least on the Ethereum side, is interop. Right? That's not a hot take. I would just be very curious, when you think about what some of those central services are, what that might be. And then we can talk about the right operating model here. And there's a lot that's gone on with the Ethereum Foundation and changes. And there might be a second foundation now, who knows? But I would be curious, from the perspective of an L1, like if the four of us were starting one today, we'd be like, all right, this is what the L1 needs to take care of. And then the rest we should leave out to the market.
I mean, I think fundamentally what you want to solve for is a way for all of these different rollups or shards or however you're horizontally scaling to be able to read from each other without having to run each other's full nodes. I think that that's at the heart of what we're working on at Espresso. This is what I think is going to be the most important thing for us to figure out how to provide collectively across the Ethereum ecosystem, is how, if you're operating on one chain, you can know and trust what the state is of another chain without having to wait for L1 finality. I think that that's what it all comes down to. And again, it's a huge coordination problem. All of these different rollup clusters have their own approaches to it, but fundamentally they're all clusters. And so it doesn't actually solve it in a unified way across the whole space. I think that that's the big thing that's been missed in all of this. And I think if we did have a stronger foundation, like literally a stronger EF, then maybe everyone would have gotten bullied into some standard that that would solve for this, but that hasn't happened. And so now private sector participants like us are trying to do that, but it's hard.
Okay, maybe we can actually talk about the Ethereum Foundation here for a little bit. And I'm just going to caveat by saying I'm not the right person to give a history of the Ethereum Foundation. So maybe at some point, I don't know if anyone else on this call feels like they could do a pretty good history lesson.
We should get Laura Shin on the show. She can.
We should actually. This is what I was like. I got to read the Cryptopians. Is what I need to read. And a huge part of this also is related to. There's obviously the Ethereum Foundation, and then there's Vitalik as the spiritual leader of Ethereum, who has some, apparently, based on at least one of his tweets this week, still some amount of direct control and authority over the Ethereum Foundation.
Who
which
knew?
I was, yeah, right. Shocker. But I really respected that he stood up and just took the authority like that and said, I'm going to be the one that's deciding this. So basically, if just to rewind the clock, about a year and a half ago, right there, or 2 years ago, let's say, Ethereum was the undisputed smart contract platform leader. And steadily new entrants like the Solanas and the Celestias of the world maybe have put a little bit of pressure under Ethereum. And specifically, probably like this last weekend was a really good example of, even though we might not love our president, the US president, launching a meme coin, an enormous amount of activity and very real, probably lasting activity in the form of stable coins like migrated over there. Okay, so there's been an enormous amount of pressure to maybe actually have the Ethereum Foundation be more forward facing. So recently, this has meant Vitalik also going on a little bit an interesting, I don't know what you'd call it, maybe like an equivalent of a Zuck arc. So he's got a Milady PFP now. I think there have been calls for stronger leadership. He's tweeting Milady, which I don't know if anyone finds that hilarious. I find that hilarious.
So weird.
I love it.
It's
I
like,
think Cogrel, formerly of Scroll, was saying how cringe it is. And that kind of resonates with me, but I feel like we're also seeing this movement of big shot CEOs or leaders in tech
Bronze Age
owning their cringe. Like they all go on Joe Rogan and do a confessional, and then like Zuck emerges the other side and is just like, I'm going to wear my chains and you guys are just going to deal with it. And like, this is who I am. I feel like it's kind of the equivalent of that.
I was literally going to bring up the Zuck interview on Joe Rogan because he's talking about like bow hunting deer and like looking like Jack Harlow with a gold chain on. And it's like, this could not be different from more different from the robot who glued his hair to his forehead 2 years ago. Like it's just completely 180 different.
They all have the same PR firm, I feel like.
Yeah, they must. Oh, do they? Okay, yeah. So
no, I mean, I have no idea.
I don't know, but I think people just wanted to see a little bit of a firm hand on the stick. And I do think that this idea of decentralized leadership is something that you hear talked about quite a bit in at least Ethereum circles. And at least I've always kind of wondered if that's a real thing or not. And I do think, just to maybe empathize a little bit with, I think, the position that Vitalik was probably in back in 2015 and 2016. I haven't read the book, but I was reading a bunch of Lorishin's tweets this weekend. I think he got really genuinely burned by being very optimistic and trusting in like the good of people, and that didn't end up working out. I also would imagine there was probably a tremendous amount of legal liability when he was first constructing Ethereum. There was a ton of value locked up in there. And maybe there's an element of just being like, not everyone wants to be this like Bronze Age, kind of corporate US CEO leader. And also I think there was a tremendous amount of faith and belief in this idea of decentralized leadership. And that's why in the Ethereum community, there are many more DAOs and things like that than some of the other newer blockchains, like real, true DAOs. And so I don't know. I think all of that has kind of coalesced in what I would describe as when there's no clear leader, everyone is shouting different suggestions, right? It feels like a cacophony of the EF shouldn't be selling anything is like all from the traders, right? Like you guys selling ETH is ruining Ethereum. And then there are people that are suggesting to scale the L1. There are people that are suggesting double down on the Ethereum roadmap. It's like everyone, because there's no one who said my hand is on the stick and what I say goes, you've got everyone kind of piping up their own solution. And so I think what you're seeing simultaneously, there have been a couple of different tweets from Vitalik to say, hey, there's a restructuring going on at the Ethereum Foundation. It's either going to be Danny Ryan or Jerome, I'm blanking on his last name, coming in to probably replace Aya Miyaguchi, who's been the leader there for a number of years. They're redoubling down on some goals. He had a really funny tweet about not executing a vibes-based pivot from feminized WEF soy boys to a Bronze Age mentality. Which that was an interesting take. But at least, he's jumping back in, assuming a position of authority here and making changes, which I at least deeply respect and I think is desperately needed, frankly, from the Ethereum community. The other two developments that I'm really curious to get everyone's take on is, one, the Ethereum Foundation actually transferred 50,000 ETH, so over $100 million, and they're going to use that to experiment in DeFi. So I think they're testing deposits in Aave at the current moment. And you know what? Like, good for them. I mean, that actually feels like meaningful change.
How is it 2025 and they're doing that though?
I mean, I'm with you on that. I'm with you on that.
Better late than never.
Yeah. It all goes back to Uma, what you kind of opened the show with, is that we need to be in the trenches trading the Trump coin in order to empathize with users and understand what the hell we're even trying to build here.
Mm-hmm.
Yeah, I think I tweeted about this earlier this week, and I got the sense it really resonated with the community that, like, the cultural problem at the EF is that people are not product-minded or customer-centric. And look, that makes sense. Like, Vitalik is a researcher, and he's like a true genius at that. And you look at Justin and Dankrad, and these people are, so brilliant. And Ethereum does have really world-class people who are researchers. But, as blockchains actually become used and aren't just like research projects, it's really important that you have a really strong product voice. Because, like, let's examine the Justin Drake Bean Chain debacle, where, like, I mean, I have all the respect in the world for Justin, but you can tell, like, that presentation was made by a researcher who's not like paying attention to like what are the problems Ethereum users or Ethereum ecosystem users face today. Because like the Beam chain does not move the needle on that stuff at all. Yeah. And so if you just have like people like Justin there, you're naturally going to have like an inclination to only focus on research and have your roadmap really like research brain, ivory tower. And I think the lack of product people is really holding Ethereum back. And yeah, I hope as they're making these big transitions in the EF that they take that into account. I'm not honestly super optimistic that they will, just because it's so far from like their history and like their DNA. But if I had like one kind of message to send to them, it would be just like have people who actually think holistically about customers, are actually the end user of the chain, think about product, and can push back and be like, guys, like, is this research stuff moving the needle? Okay, is it not? Okay, if it's not, we're not going to do it for right now. I think that voice is really important and missing.
Yeah. The other thing too that I was sort of thinking about is that this person, whoever joins as the head of the new executive director of the Ethereum Foundation, is going to need to be super aligned with Vitalik. And I think a lot of this still does come down to him, right? This would be, the analogy would be, you are a CEO that is starting at a company where the founder is still there, and everyone hangs on.
It's like the Twitter CEO who joined alongside Elon when he bought it. Linda
Right.
Yaccarino. Do you guys remember this?
I
And
do.
I don't think she had any like concept of what Elon was trying to do, and it was a total gong show.
I
Totally.
think she's still there, right?
Oh yeah, she is still there, but not as like the public face of it anymore.
Yeah,
That's Elon at this
She
point.
might be. You know what else is another example of this? Maybe who is the the Disney CEO? Bob Iger.
Oh
right?
yeah,
So,
yeah.
so Bob Iger retires. He names his successor. His successor does something that was against, I don't know, some critical. He deprioritized the Imagineers or something like that at Disney, and immediately he comes right back in, replaces the old CEO, and so I think this is a really challenging role for someone who isn't completely aligned spiritually with Vitalik here, because ultimately everyone's going to hang on every word that Vitalik says, and I'm sure even if he's not in an explicit position of authority, he's certainly in like a position of moral authority. So I think that if this change actually does happen, it probably does have to come from him. Right? Like I don't think actually anyone else is really capable of stepping in and fully changing the direction of the ship in as drastic of a way as it probably needs to be changed without being aligned with him. Otherwise, I'd imagine they just get undermined, right?
I think a big element of the early days of Ethereum that people have forgotten or maybe just don't even know about was the role that Consensus played. Consensus,
Yes.
like SYS, the company, where they were the go-to-market arm of Ethereum. Like they were doing everything that you see the Solana Foundation doing for Solana in terms of like incubating applications, incubating infrastructure. They were behind MetaMask. They were behind some of the early DEXs on Ethereum. They were behind some of the development of like the early validator infrastructure, like whether on the infra side or the app side, they really were the user-facing arm of Ethereum. And that was all Joe Lubin. Amanda Cassatt, who now runs Serotonin, marketing agency. She was there at Consensus in the early days, and she tweeted this earlier this week that like, wow, it really seems like people are not aware that Consensus was doing this. And then what happened? Consensus got kind of bloated and they overhired, and then they had to go through many rounds of layoffs, and they ended up spinning out a lot of these companies to be independent things. And it doesn't have sort of the clout or the impact that it once did. But I think that that's what we need. That's what we want to see. It's not the EF to become the degens who are developing the next DeFi application. I think that we need that to be a consensus equivalent.
All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty aims to make it the most rigorously reviewed code base ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap v2 and v3 without a single hack. So Uniswap v4 is dedicated to bringing that same level of security and transparency to the v4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there's a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today. So as a piece of anecdata there, Amanda Cassatt, Gutterman at the time, is indirectly the reason Blockworks exists, because Jason, back in 2017, went and listened to her talk about Ethereum and came back to me, because we were living together at the time.
No way.
And said, we should start an Ethereum consulting company. And that became Blockworks like 4 months later. So
that's hilarious.
So that type of outward stuff, it actually does snowball and it's massively impactful. So maybe let's talk a little bit about, so Konstantin Lomashuk, who is the, I believe, founder and CEO of P2P, which is, associated with Lido, and frankly, one of the most successful investors and builders in the space, whose name maybe some people don't know, has been talking recently and tweeted earlier this week about launching a second Ethereum Foundation. So I think he teased this back a couple of months ago, and it got some amount of response. And then he tweeted out like second EF today, and then he tweeted and said, hey, there's no plans for this yet, but he keeps tweeting about it. And other people from Cyberfund, which is Konstantin and Vasily, is their basically family office investment vehicle, have been tweeting about it. And I think people are genuinely pretty curious about it. It seems like he's relatively serious. This is my own opinion. I've got no insider knowledge, but I would be curious what the three of you think about this. And if he were to do this and you could have some input or say over what a second foundation would do, what would you like? What should it do? Should it be replacing? Should this be consensus 2.0? Or what would the mandate be? I guess from your perspective.
That's what I basically think it should be consensus 2.0. I think that it should be maybe using some of sort of EF style grant funding to fund, again, like the more consumer and advocacy oriented stuff that the ecosystem needs. I would not try to have it compete with the OG EF on the research front. I don't think that there's a need for more of that. I don't think that would make any sense.
I agree. I think the marketing and like the BD side of whatever, like Ethereum needs an overhaul. But I still think the culture of the protocol teams and researchers and builders has to also change. I think that I can't remember who articulated this, but there's just like a lack of urgency, essentially, I think, around the roadmap at times. And I think like the Beam Chain announcement was sort of where that all came to a head, of like, oh yeah, all these things in 5 years. And you're like, dude, like what? Like we thought that, we want this in 1 year, and actually we want more than that in 1 year. And I think, the blobs, the fact that like they did ship 4844, but the scale of blobs is just orders of magnitude less than what the Ethereum rollup ecosystem needs today, is another example of like, dude, like, I don't know, you guys need to like kick into higher gear and just ship way more. So it's not just a marketing thing. It is a product thing, in my opinion, and culture thing.
Yeah, I totally agree on the culture thing. Like, if your customers, your L2s are your customers, and they're begging you for blobs, and that's the only thing they talk about, like, why do we even have any other features in the hard fork? That makes zero sense, right? Like, that's a very extremist point of view, but like, there's probably only one feature that matters. Like, let's ship it as soon as possible. And I think the lack of urgency in the timelines comes from like not ever talking to customers. Cause like, if there's someone who's really wanting something and needing it yesterday, then you're much more motivated to actually ship it. And like the devs then will be like kicked into high gear. So yeah, I totally agree with Nick that like a big cultural shift is very needed. And like the cultural shift is not just a problem in the EF, like their culture kind of trickles down to like all the other orgs in the ecosystem. And like that's just generally like not good.
I would agree. I think Consensus did a really good job back in the day. And actually, I remember visiting, they had a really funny office back in Bushwick. They actually just rented out a straight up apartment building there. So you would like go in and it felt like you were just getting into an apartment building, and like each apartment would just be people working. And it's funny, like Consensus actually got a lot. They weren't run like some centralized command and control economy. Joe Lubin actually wanted to run Consensus like a DAO. And so there was a tremendous amount of friction and like huge amounts of turnover and layoffs, et cetera. But they still did an enormous amount for Ethereum, right? Like they incubated Infura, MetaMask came out of that. Like so much good came out of that endeavor. And it was interesting because there was some amount of friction, I think amongst some of the more research-oriented, dev-oriented people in Joe Lubin, because Joe Lubin was trying to commercialize a lot of stuff. And honestly, a lot of devs and researchers really don't like that. But it's two sides of the same coin here, I think. And you definitely do need more of like a product business orientation to make the whole chain successful. But
another thing I want to say about Consensus is, not just that they brought a lot of the first like use cases of Ethereum or like big things like MetaMask, but they also have brought in an enormous amount of talent into the space. Like, like there's so many people that I know that are like OGs, have like contributed so much to crypto on the whole, way beyond Ethereum, who got their start in Consensus. It might have been only for like 6 months before they got laid off or whatever, but like they brought in so much talent, just raw, massive talent into the space. I think that they changed the course of crypto history to me.
I agree. All right, I want to end on this on a topic around Fire Dancer forks. So we had a couple of, this has been a rumor for a long time, but actually hasn't manifested in the way that I necessarily thought. So there were two announcements this week for new chains. One was Fogo chain. So this is just a fork of the Fire Dancer client, which is theoretically going to be the super majority client on Solana. And I actually didn't realize, but Doug Colquitt, who I really respect from Ambient, he actually wrote the white paper, is involved in the project, and Ambient is going to be building on Fogo. And I pinged him before this, where he described Fogo as basically largely a fork of Fire Dancer, which makes small trade-offs on decentralization for an extreme amount of outperformance. In addition to that, you also had so there's a guy named Liam Heeger. So he was previously at Framework, and then he joined Fire Dancer and was one of the core engineers on that team. So he also spun out a new L1, which is Unto Labs. Unto Labs, I think we're still a little bit scant on details around that, but it's clear that they're not creating an SVM chain. So they're reimagining the architecture from the virtual machine to consensus and everything in between. Presumably, there'll be some amount of knowledge or logic that he employed when he was working on Fire Dancer very closely. It also, I guess, bears noting that Jump is suing Liam for his work for violating a non-compete. But it's interesting.
The most like hedge fund thing I've ever heard.
Yeah.
I cannot imagine that happening in like Silicon Valley, California blockchains scene. Obviously, we don't even have non-competes in this state, but yeah, I got a kick out of that.
Yeah, I thought that too. I'm not sure how much they're going to do there, other than they probably just want to slow him down, I would guess. But either way, it's interesting because I've heard of rumors of these chains, and I just assumed that they were going to be SVM L2s on Solana. It is interesting to me that these are both new L1s that are launching here, and I'm wondering what you guys think about this. This was kind of the eventual modularization or modularity that was going to come to Solana. I was surprised that these weren't rollups. I don't know if there's a technical reason for that. I don't know if there's a social reason for that, or I don't know if there's I want to get an L1 valuation reason for that. But I would be curious what you guys think of these spinoffs. And I'm just curious what takes you guys have.
They sound kind of like the monads of Solana. It's like, let's take Solana, it's been successful, and let's just speed it up. And I don't mean that in a negative way. But I do think probably there's two reasons why they're L1s. One is, I think definitely the market has there's a stigma around being L2 right now. My perspective on it is that that's a short-term thing. I mean, it also depends on what your goal is. Are you trying to build an ecosystem of its own, or are you trying to build like more of an application? And I feel like rollups in the long term are meant to be like applications, and not like just another generalized execution thing where you try to copy and paste the same applications from whatever L1 that you're building on, which has sort of been the case. And I think also the second reason they're L1s maybe is because I think culturally and in like the engineering, like monolithic mindset, like these teams are coming from the Solana worldview, where and I think they also love to nerd out on like optimizing consensus and all these other aspects that like you don't do as just an L2. And I think that they come from the worldview of like, we want to build the fastest single L1, and rollups are fragmented and things like that. I don't know, that's the way that I read it.
Jill, I'm curious what you guys think.
Yeah, I mostly agree with Nick's takes. I actually know Liam somewhat personally, and he's a super cracked dev, really awesome. So I'm really excited to see what they end up building. I know it's not a SVM, like the virtual machine is not SVM, so I don't think it's like really a Fire Dancer fork. But yeah, I'm excited. I think there's going to be interesting experimentation, but mostly I'm just excited because Liam's very smart. So, bet on your smart friends, stuff like that.
Yeah, I think it's great. I kind of love the emergence of new L1s. I mean, obviously there are some that are still highly anticipated that haven't launched yet, and those have been the talk, like Monad and Barachain. But mostly the focus has obviously been on rollup architectures over the last few years. And I think it's cool to see the Solana ecosystem kind of spawn maybe its own attempts at becoming Solana killers, much like Ethereum did, right? With some of the big chains that have come out of, inspired by the Ethereum architecture. So yeah, I do think that there is like a cynical take on this, like, oh, L1s are the hot thing again, and that's the valuation game that people are playing. But I also do think that it's a recognition that there's more design space to explore there, and I think that's good.
I got a question about the relative valuation game thing. Do you think that's rational or no? Like on one hand, I could see, I think that, I know Blockworks talks a lot about this metric, and we kind of worked on this with John, but REV is a metric that applies equally for L1s and L2s. And so I could see a world where these are just chains, no one really cares if it's an L1 or an L2, and it's generally based on the amount of value that you create on your chain. On the other hand, I do think there's kind of a persistent, people like things that feel more full stack. So you get this in like the data business where, if you're not actually, like, for instance, in, crypto data, you get a much higher multiple on your revenue if you actually run the nodes, index the data yourself, and then display it to people, as opposed to if you just display it on the top end. You might have the same revenue, you might have higher ARR growth, whatever it is, but there's just a premium. Like, people like the idea of like full stack. And I wonder if that's somewhat enduring when it comes to L1s, because it kind of feels like, well, I've got the base layer, I've got the whole thing. So I don't know. Do you think it's an enduring thing or just sort of ephemeral and it's kind of a silly thing at the current moment? Because I can kind of see it going either way.
I'd be curious what Nick thinks of this, because you guys built an L1, but in kind of the modular space. And yeah, I don't know if you've thought through the implications of that.
Yeah, my view is that like that's a temporary way that I think things play out, and in the long run, like what Celestia is infrastructure for applications that outgrow their infrastructure, if that makes sense. So it's like, I built Uniswap, and then it just dominates all of, Ethereum transactions and volume. And all of a sudden it's like, why am I even on Ethereum? I don't really want to run my own chain full stack, but I want to be running on a stack where I have the majority ownership of and control of this thing. And so I think that's like the model that a lot of these things will follow. Hyperliquid might be an interesting counterexample. I don't know if because their plan is actually to they start as an app chain or like rollup, application specific rollup, and they want to move to an L1. I don't know. I just don't see like to me the thing is that the trade-off of what you lose by being a rollup on Celestia versus being your own L1 is almost purely just a narrative thing and like a label versus like anything actually meaningful technically, in my opinion. So I think that's not a durable reason for like a valuation discrepancy.
Yeah. All right, team. I think that's about all the time that we have for this week, but this was a very fun, I guess technically second one with this crew, but Jill and Uma, excited that you guys will be joining us going forward. And yeah, a lot of fun.
Covered a lot of ground here.
We did. We actually only covered like half of the topics that we had listed out. But I actually don't know if the XRP and SOL ETFs are actually news. I think Eric Balkunas of Bloomberg has walked that back a little bit, but that's the other thing I want to chat with you guys about. But we can talk about it next week. All right, cool. Well, we can end here and see everyone next week.
Sounds good.
Thank you,
guys.